Mark, let's start with the clues you're getting about global growth from various asset classes. Stocks seem to be trading with enthusiasm for a growth narrative. President Trump is talking about 15% growth. Are we getting all those clues consistently from all asset classes?
No, Anna, I'm super confused by the price action this morning. I think the news flow this week was very negative for long-end bonds. Not just the Taikechi election victory, but of course we have political problems in the UK. We have the fact that, Trump's talking about Warsh, getting growth up to 15%. We have the AI corporates continuing to kind of go on a debt binge. Everything should have pointed to kind of higher yields, and yet bonds are trading tremendously well all around the world. Now, normally you'd get that scenario if people are saying, hey, I'd love to lock in yields at these levels, long-term yields at these levels. It's about the long duration bonds that I'm worried about, which would imply that they kind of think that we're going into a negative growth situation where we're going to have to cut rates significantly. That doesn't make sense, and it's not tallying with all these other assets out there, like stocks that are trading pretty positively. So to me, there's something weird about how the price action is this week. I don't think it's sustainable. I don't have high conviction about which way it breaks. My bias, which is, I'm warning this because it's dangerous to lean into your bias, my bias at the start of the week was that bonds should be weaker, yields should be higher, which is the bit that's going wrong. So I'm on the back foot right now, so you probably shouldn't listen to me at all.
Always listen to you, Mark. Of course we do. Stocks yesterday, still squeezy? Is this still a continuation of the squeeze? Big squeezes tend to be quite negative.
Yeah, look, absolutely. You get the most powerful rallies, short-term rallies in bear markets. That's absolutely the case. I think that the price action there is still kind of relatively fragile. My narrative for the week was that we had all these reasons for yields to go higher, and then that would be the next catalyst to kind of knock stocks for another bit of a broader kind of washout. We're not really seeing that yet, so I'm a little bit confused. If yields continue to trade like this, it's very supportive, and so maybe we continue to consolidate in stocks for a while. I don't think we roar away to the top side. As you know, my structural view for 2026 is quite positive, is quite bullish, but I'm just quite worried about the short-term price action, and that's not gone away. Which way we break right now, I really don't know. If I'm forced to choose, I still think we break with a little bit more of a washout in the momentum trades, the meme kind of trades. I still think crypto, precious metals, some of the tech names are trading in a not great way despite some of the power of the rallies.
Yeah, Bitcoin down again today, to your point. Mark, do you have conviction around the rotation trade and the diversification we're seeing? Again, the outperformance of Europe yesterday.
Yeah, I think the diversification trade makes sense. I'm the person who always falls for every value trap. And as you know, I've talked for a long time about US stocks, will underperform because the rest of the world will outperform because they're kind of cheaper. It's that value play. We move away from the tech space. So I kind of believe in that. It's gone a long, long way now, which kind of worries me. Small caps, for example, in the US can't drag the stock market forever. I think some of the indiscriminate targeting of the software space has gone overboard. I think some names in software should suffer by what's happening in AI, but not all of them. So I think that, the rotation as a fundamental theory makes sense. It's probably gone too far, which maybe sums up a lot of how I'm thinking about markets at the moment.